welcome to the CNBC TV 18 special. We're coming to you from Mumbai as we've just concluded the India Business Leader Awards jury presentation. We've got with us a very special panel. They've just finished deliberating on who will walk away with the honors at the India Business Leader Awards to be held shortly. But we thought since we don't get them together in one room, this was the perfect opportunity to get their minds together to talk about the battle for growth. And Mr. Kotak, I'm going to kick this off with you. You're a victim of fake news. If you were to write a note today, not the one that you didn't write, but the buzz was that you had written that note. If you were to write a note today about the India story, short term, medium term, long term, what would be the biggest risk that you would red flag?
I think
The mic, sir.
I think first of all, I am a believer in what is called equanimity. When things are good, they are normally not as good as people think they are. And when things seem bad, they are not as bad as they are.
So they're not as bad as you believe the markets feel, especially when it comes to things like the NBFC sector today?
In my view, there is of course structural corrections which are going on. And in the middle of those corrections, it always looks very intense. But over time, I think the marketplace has a way of differentiating between what is good, what is middling, and what is bad. And effectively what the marketplace is doing is certainly making it better for the good. I think the middling will sustain with support from the financial system, and I've got Rajneesh here. He's out there supporting the sector with the steps he has taken. But what is not good will obviously face the brunt of the pressure.
So the question then is, how much more pain as we deal with the what is not good and what is bad?
I think one of the big issues which has come up is a very fundamental risk management point in this context, which is asset liability mismatching. For most of us who live in the financial sector, this is the core to sustainability of the financial sector. Therefore, if you have a structure where in a fund structure, it's like a current account. Any investor can withdraw money overnight. And if the end asset is a 10 or 15-year asset, there's a fundamental asset liability mismatch. And from a structural point of view and a policy point of view, we need to fix this. And in this context, if at all, I would like to highlight one point is as the financial sector has grown beyond banking into mutual funds, NBFCs, insurance and others, need for a holistic view on the financial sector is more essential today than ever before.
When you say holistic view, you mean an overarching regulator? What is the point?
I think a much greater integration across regulation and regulators, much greater communication also with a marketplace which is so much in the listed and open space where even a small transaction in debt of a few hundred crores has disproportionate impact.
Before I get to the other panelists, and this is the question that everyone is grappling with today, are we headed to a debt market capitulation anytime soon? Is that fear overstated?
No, my view is that there are corrective mechanisms possible. So one is, I think, securitization of the portfolios, where effectively wholesale funded institutions can securitize their portfolio and create liquidity. That is one. And second, with reference to housing finance companies, I would urge through mechanisms like NHB to significantly increase the refinance lines, which enables...
Which has started to happen already.
But I think 6,000 crores was what the increase was.
So you're saying that's
not enough.
a
larger increase where quality housing finance companies get larger refinanceability from longer term money rather than short term debt.
Okay, Mr. Rajneesh Kumar, let me ask you, and first let me ask you about the deal that's just been done, or the payment that's just been made, which is coming from ArcelorMittal, 7,000 crores. So that's good news for the banking sector in general and for you in particular. Relief?
No, definitely it is a big relief, and two accounts. There is almost 100% recovery for the banks, and I think everybody in the banks who had lent money, they have worked very hard in last 1 week to conclude this transaction, and I am definitely very pleased with what has been the outcome till date.
Okay, I'll talk to you about the other IBC cases in just a second, but let me address the point that I asked Mr. Kotak about, and that is the current fear in the market when it comes to what's happening with the debt markets, what's happening with NBFCs. You perhaps on a significant amount of nudging from North Block, also decided to extend yourself to the tune of 45,000 crores. I know you're smiling, sir, but let's be clear. There has been a lot of nudging from North Block in order for you to try and alleviate some of the pain that the NBFCs are faced with today. So how much worse is it going to get before it starts to get better?
Very unfair to State Bank of India management and Tapo. So this is really unfair.
Okay.
So in everything you cannot see the hand of North Block.
Okay.
So that you should not.
Okay.
So that is the first thing. Because SBI management have some faith in their capability to take right decisions at the right time. And if State Bank has seen an opportunity, so we have utilized it and we are utilizing it. So that is the first part. Second part is about like the situation as on date. One is that all money in the system is made looking to risks. And you make money in liquidity risk, credit risk, forex risk. It is all about risks. But how the risks are managed. And it is come a little bit as a surprise, and including myself as a banker, that we never paid attention to this asset liability management, which was building in LBFCs. And the example of Northern Rock in 2008,
yes,
they were a very excellent mortgage lender in UK, and precisely that is what happened to them, that all their margins were coming by funding the long term through short term. Every cloud has a silver lining. Silver lining for India is that before it could become of such magnitude that you could not tackle it,
intervention has happened.
Intervention has happened.
Okay.
So this is a silver lining. And now, how do we tackle the situation? There are various ways and means. And
so you know, there was a discussion that was happening in our studios a few days ago, and in a conversation that some experts were having with Lata, you know, the fear that could this go back to what we saw in 2003? Could this be that kind of a shakeout that we will see in the NBFC space? Do you believe that because of the intervention that's been made on the part of banks like State Bank of India, on the part of the government, etc., that may not be the case?
No, I don't believe that is the case. First is that one difference which at least I have noticed, and because we are very actively dealing with most of the NBFCs, more than 100 at the last count, the underlying seems to be okay.
Okay. So
the issue is more about the ALM. And like if you have more than 4,000 NBFCs, some of them may be having some other issues also. But as of now, if we take timely steps about addressing the liquidity issue, addressing the ALM issue, and as Uday has suggested, securitization, which even if at the instance of North Block, I cede it to you, but that is a good solution.
So just on the securitization, sir, what can we expect? I mean, as you've given us an outlay of 45,000 crores, that's the aspiration. What can we expect over the next few weeks, months?
No, few weeks, months is that our priority is that first we have prioritized in the sense that whoever needs more help and have a good quality portfolio which meets our risk underwriting criteria, first we will pick up that.
Okay.
And once we have addressed one or two companies in that category, I believe that over a period of next 1.5 months, we should be able to start coming out of the situation. Okay. But definitely some liquidity support for the mutual funds is very much needed at this point, because there is a redemption pressure on the mutual funds, because the corporates have withdrawn their money out of the liquid funds. So that is the genesis.
So you are seeing redemption pressure today?
Not me, the entire market is seeing. And that is a common knowledge, and that needs to be addressed. And as I said, that the warning has come very timely for the mutual fund industry, for the bankers, for the NBFCs themselves. And if this had not happened in this year, and maybe we had allowed this situation to continue for 2 more years, then the scenario would have been very, very horrifying.
Okay. Very, very horrifying. All right. Kalpana, let me ask you, on the back of what we've just heard from Mr. Kotak as well as Mr. Rajneesh Kumar, how much of a challenge is this going to be as we push ahead with the battle for growth? I mean, this was, our tryst with getting back to the sort of 7.5%, 8% kind of growth number. Do you believe that this is going to be a speed breaker? It's going to be a hump? How is it likely to impact the tryst for growth?
So certainly the growth in the NBFC sector has to shrink, right? I completely agree with what Uday and Mr. Rajneesh Kumar said earlier. This is a liquidity issue and not an asset quality issue. But given that they are going to be shrinking, the slack has to be taken up by the banking sector. Now the private banks are already operating at close to 98% credit to deposit ratios. So their maneuverability in terms of significant growth, unless the deposit growth picks up significantly, is going to get challenged. That's why I'm such a votary of securitization that both of them referred to. And I think today securitization is possible through horizontal strips.
Okay.
So I'm not as pessimistic about the mutual funds.
Okay.
If we give them the right tools to manage for up to 1 year maturity through these securitization strips, I think we can just break this logjam.
What would be the biggest red flag that you want to highlight today, outside of this?
I think if there is a complete freeze mode on the part of the banks, that is a red light for me. Which fortunately State Banks already announced the 45. If more of the other banks that are not constrained by PCA and some of the private banks, if they can think of a way of securitizing their own portfolio and then cherry picking the NBFC, I think we can quickly break.
Okay.